All right, we are streaming. If you're watching this video after it's already been streamed live, you can skip ahead because for a few minutes I'll be waiting for people to join. I just sent out an email. Usually I start in about 4 minutes. So you can look in the description or the comment section and see when the actual thing starts here. So we'll give a few minutes for people to join. Just give it a few minutes before I start, letting people join. Should start in about 3 minutes. There we go. A couple of people joining. What's up, guys? We're going to start in about 2 minutes. Just letting people join. You can type in the chat. Looks like we may actually have some action, hopefully the next hour, that we could see in real time. But I'll be explaining exactly, picking up from where we left off with stuff and following the storyline, which has developed a little bit. And I will show you. Also look at the Forex stuff too. Let me bring that up. So starting in a couple of minutes, guys. What's up, Mr. Romano? Who do you use as a dealer for crypto if living in the U.S.? Coinbase, which is GDAX. Do you know Coinbase? Which is this. This is GDAX, the platform. So if you go to Coinbase.com, you see up there, then Coinbase.com and GDAX, which you may have heard of. Okay, yeah. And that's the only one I've used, so I can't really tell you if it's better or worse. I mean, everything's been fine, and I know it's kind of, if there's one to trust, right, it's probably this one. Ed, what's up? Let's start in 1 minute. Give it a little more time for people to join. We may actually have a little something to talk about in real time that's developing. We'll get all caught up, let you know what's going on, what I'm doing, what we're looking for. We haven't really moved since I started the streaming this week. We've been in this range between basically, 10 and 12. But we do have some new facts to talk about. Facts. Terry Doo, what's up? To get rid of the Amazon bug. Oh, okay. Thanks, Ed. You know, I don't like bells and whistles. Keep it clean. Mr. Romano, always enjoy your visit. Cool. Always learning from you. I mainly use wyckoff, but VSA is obviously derived from it. Yeah. They kind of work together. Or VSA improves on wyckoff, whatever you want to say it. But I always have a disclaimer. The way I trade is not exactly either of them, but I've obviously taken a lot from it and kind of worked it into my own method. And some things I, are holy grail, and some things are, I'm going to leave that out. So there are differences in what I teach compared to like traditional VSA or wyckoff. But obviously those got me on the right track. It was just kind of trial and error after I learned those, and I wasn't still successful, but I knew that I was onto something. Okay, yeah, so get rid of the blue cloud. Double-click the upper edge of the cloud. Inputs. Okay. Yeah, I don't even know this. I should have read the last thing you said. Oh, show MA? Yeah. Very good. I certainly don't know everything. You guys got something for me? Let me know. I feel like it's a little harder with futures because there's an open, but still applies as far as time of day. Yeah, it applies to everything though. Some things are going to be more, I don't know, whatever you want to call it, easier than others. Okay, let's get going. We have 7. There's going to be more, but you can always go back and watch this a few minutes after I end the stream. You could go back and watch it. But you guys are here from the beginning. Okay. Let's get caught up, right? Remember where we were, everything I said. I mean, the last couple of streams were like, a long time to watch, but hopefully you got my analysis of what's going on here. And to kind of review that and get back into the storyline so we can get to where we are now. Let's go from here. So at this point, we had focused on this saying, okay, large demand is coming in and buying at this level, which was really not surprising. There was large demand in this area before. So this is accumulation, and this confirms accumulation, which is the higher volume of low prices. We know this stuff, right? Okay, now, if you don't, you go watch my other videos. So there's strength, accumulation, demand, large buying, smart money buying, whatever you want to call it. And they're buying into sell-offs. I heard somebody today saying smart money sells, and they had it so backwards. And this guy has like 100,000 subscribers or something. I don't know. Crypto King. I'm sorry, I got to call out Crypto King because he doesn't know what he's talking about. So large buying into what would have been a pretty bad sell-off, but to a smart money trader, that's an opportunity to buy, right? Was it buy the, what was the saying we had? Sorry, I'll stay on track. Okay, so coming from here, this is initially our automatic rally, right? Wyckoff stuff, you guys know. I talk about my videos. First level of resistance after strength, first level of resistance. Now I'm just kind of starting back here so we can catch up to the story here. Now, this is what I call a failed markup. Because if you look at the pattern, right, we have strength, and this is wyckoff, picture perfect right here, right? Again, we don't have to go back far. We're in it right now. There's an initial, in a variation, because sometimes you'll just get high volume, that's the low, and you go up and do your thing, right? Many of the wyckoff drawings and patterns have the initial, I forget what it's called, it's been so long, the initial demand and then the second one. It also kind of creates a fake breakout on the second one, which is, of course, everything comes back to the fake breakouts and fibs and support resistance. So this is the automatic rally. You get another fake break, which tends to happen. These are catching stop losses, by the way, just to inform you a little bit more about what goes on here. Panic selling is one thing, but people aren't so dumb. And after a while here, they're going to say, okay, buying low is smart. I'm going to put my stop loss right there. And of course, they get hit. And when they sell off the position that they bought here, meaning stop loss, opportunity for smart money to buy that, I'll buy that from you too. Thank you. So accumulation goes on as usual. Nothing changes in any market, right? Now, this is the automatic rally, which means once we get above it, we're attempting to mark up. If we were successful here, it would be the markup, right? What happened? Weakness, right? Higher prices attracted sellers. So we have some buyers and sellers close together. There's been some accumulation over time, but that's still some decent volume of weakness here, right? So it failed, and it became a fake breakout on weakness. of the automatic rally. Going forward, this is the automatic rally, meaning now going forward after a failure, we need to get above that to call it a markup. Okay, so I adjust the automatic rally to that now, right? It makes sense. Once we clear this, we can say we're in markup. Supply's hanging around there. The markup comes from lack of supply and the demand pre-positioned. So we revisit it again, and again, you notice it didn't come down to the bottom. So the sell activity was really up here. It's not like another wave of selling came in for a long period of time. Now trying to get slightly above it. If you notice, it's slightly above, right? The high price, trying to get into markup. There you see weakness again. And that becomes our new automatic rally, right? Again, if this weakness didn't show up, off it goes. So go forward. It's close. We see some volume. It's new high ground. It's trying to get out. Oh, it's not happening again. See the volume. So this supply selling through here, right? There's large buying through here. Okay. That's what the volume's saying. Very simple. Higher prices attract sellers. Lower prices attract buyers. If the volume's there, it stops the progress. That means they showed up. So it stops progress. Up move. Here's our sellers. New high ground, the most revealing. New low ground, the most revealing. All the same stuff, right, guys? Okay. Let me just check, make sure everything's good with the sound and everything. Preliminary support. Preliminary support. Thank you. That's what it was called. I literally haven't looked at the wyckoff material in years. Preliminary support. Yes, sir. He knows his stuff. That's very preliminary. Okay, so here is, again, a failed attempt at a markup. We come down, and here's a little positive sign, which is something we haven't seen in this price area, which is some buying, right? Again, it's higher volume into the lower prices, stopping the progress. So if you notice, our bottoms are actually getting higher, and this one had a bit of demand. So the buyers are getting a little more confident here, right? What does that tell you about the next try? It has a better chance, but again, we know now what's going to tell us is likely to make it or fail, right? It's the rejection of the price of the increased volume, and it's more likely to be on lower or medium volume when it successfully breaks out, right? Now, some of the positions that I've built up in this area, after seeing this yesterday, which is here, I was actually with some friends, and I saw this, and I go, first I see this price, and I get excited. It's finally going to mark up, right? Then I see the volume, and I say, I'm going to take a little bit off this position, because if selling is consistently here, it's starting to say, okay, we have a bit of a mismatch. We're nearby with buyers here, sellers here, right? Who knows what is going to come down, and then we're going to need those buyers to show up. If they don't, we go back. I didn't like that the sellers were consistently there, failing the markup. So I decided to shrink down my position, take some, which was in profit, just not, the real targets that I'm hoping for. But it was profitable. So just to tell you how I handled it, and it's very logical, right? I saw it once, okay. You don't like it, but it's there. You see it again, okay. Now you're really trying to break out, and again, the volume's not high, but there it is. It's saying no deal. And it came down a little bit. I said, okay, I'm going to have to. I just feel more comfortable, right? Logically, that's me. I felt more comfortable just closing some of my position off with some profit. Now, going forward, I could always add again if it goes down or whatever, but I think you can understand why at that point in time. That's active selling. This, and this is all against my position. So that's not what we want. We want the lack of supply, of course, if we're long. Let me check the chat. Okay, cool. Any questions, you go ahead. So here we found some demand now, right? So maybe we'll get something now in the next hour while we're looking at this. Maybe it'll actually break out, or maybe it'll fail again, and we'll get to see it fail again. One good sign, at least, is it is lower volume every time it tries, right? It's lower volume every time. So maybe this time around it'll be down here, and it'll actually make it out. So that's where I am. And that's the story of how accumulation can go sometimes. The imbalance, the lack of selling along with the demand, is what causes smart money buyers down here to say, we're not getting these lower prices anymore. There's not any large sell activity here is dried up, so to speak, and we switch into markup, moving price up intentionally. Lack of supply helps you do that. So let's get in there. If we're looking here, I mean, we're not into new high ground and we haven't tested the high. Again, that's why you got to update this as the new automatic rally, just like this one. Because if you're here, you're not quite there yet, right? You want to get there. So we're here. We're not quite there. But we're close. And let's look at the 5-minute. Typically, if there's going to be weakness, we're going to start to see it in this area. I typically draw a box over these pins anyway, so I almost got to that. But let's, as a sort of supply area over the pins. But let's see the, where am I going? I'm using all these different platforms now. I'm all confused. Yep. A little selling hanging around. I don't know. Maybe these are nervous buyers looking to get out with a little bit of profit that bought at 10. Whatever it is. There's a balance in the market as far as in this price area for now. But the background gives us a lot more buying. So, I mean, this is not bad. Obviously, the volume didn't increase much, but you see it kind of sell off and a fake break pattern, bearish pattern. But as we saw with the 1 hour, we need to get a little higher, and then we can actually say we're testing and trying to get into markup, right, over the recent automatic rally. And again, I update my automatic rally over time if it fails. So that's there. Expand the trading range, whatever it is there. So that's it. Let me see if there's any questions or anything. No? Okay. I don't know. Sometimes it's just like 4 questions will come in at once. So I don't know if there's like a delay. So that is that. What else can we look at? I mean, you know, again, with the other, let me see. Where's litecoin? With the others, there's pretty much a correlation. You know, it's more or less the same story here. I do have a bit on Litecoin, but most of it's on Bitcoin. But it's the same story. Again, you see the buyers. You see the supply on the first attempt, right? This one, it seems like maybe the volume's a bit lower on these attempts, but there it is, right? It's higher than the previous 1, 2, 3, 4, 5, 6, 7, 8 hours, right? And failed. Here's the high price right there. Not here, right? It's here. And there's the volume, right? Higher than the previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? So, yeah, when your high price gets stopped on increased volume like that, it's not time to mark up yet. Again, a little bit of activity came in maybe a little earlier to stop it. You see a bit of buying in this price area now, which shows a little more confidence from buyers than to be waiting here. These buyers are likely to thank for, well, it depends if you're trying to get in here. They're to blame for not giving you lower prices, right? You see a bit of demand there, higher than the previous whatever, and then a bit of demand in this lower area leading to that. Same price area. So now we're maybe kind of doing this, right? But again, the buyers are in there. And if they were to get out, there would be a lot more volume than that, and they typically would get out higher, right? Buy low, sell high. That's what the big guys do. They're not messing around. They're not impatient. They're holding their long positions here. Okay. Now, some may have done exactly what I did and, you know, trimmed down a little bit in this area. Taking a bit of profit because the outlook is you know, when supply is hanging around here, it's just facts, right? A little less probability that you'll successfully be able to mark up, right? So hopefully that's all puts you exactly on track on where we are. Where would be an entry? It depends on how you enter. Let me go to Bitcoin. Might as well. And you can see who asked that question. Surf Speaker. You can definitely watch my videos, which show trade entries. I get into it gets into the details of it. But basically, to summarize it, I'm looking for these type of, because we are moving down. And if you go back a little more, down, we came from higher prices. So in a buying situation like this, because we're not talking about an uptrend, because that would be different. This is prices moving down. And so looking to buy low sort of thing. And that's when you start to see these high volume points, stopping the progress. That's large buying coming in. So after that point, you test for sellers, and you get the pattern that I was talking about on the 1 hour chart. If you were here from the beginning, applies to the 5 minute chart because it's the same principles as sort of fractal, but it's for entry rather than getting your bearings and finding out where you want to enter. This is the similar pattern and the same principle here, but it gives you the entry. So for example, right, we see strength, which is crucial for moving down, high volume strength. First level after that is automatic rally. It gives us a sense of how much selling is going on. And you see here, I just grabbed an example of an entry recently. You see an example here of not much selling, right? Compared to our 1 hour example I was giving. Of the higher prices, selling. So, initially, according to the 14 EMA is what I use for a test, and if for sellers, because again, buyer is low, seller's high, and typically if you get low volume, no supply signal here, if you notice it kind of dropped off, then and that's under the 14 EMA, it tends to move up after that and give you a good imbalance of buying, lack of selling. But going forward and looking at some other opportunities, that's like really early. Is the automatic rally resistance setting up here, which at this point in time, as it's coming down, you say, okay, here's a resistance automatic rally. It does a double bottom fake breakout pattern, which I talk about every day because the charts do it every day. There's buying again, which if you didn't enter yet, gives you a good indication that it tells you the setup has improved. One bottom is nice, two bottoms with a fake breakout. The unfinished U shape, you guys know what I'm talking about, right? This volume is high, but typically not as high as this. And this represents your selling, and it's very low, right, guys? A lot of you know this. Okay. Here it is again, right? I just pulled up any chart. So some things never change. Now, automatic rally, when it breaks, again, off the second bottom, tells you it's more likely to move up. But typically, if there's an automatic rally, I'm waiting for it to get through. There could be another sort of test entry like this in here, but it didn't happen in this case. So I'm moving up and breaking the automatic rally. Again, there was some supply here, like we're similar, like what we've seen with trying to get through this today. But this happens, and it accepts these prices on low volume. So the selling that was here, okay, maybe there was some. Those are actually some decent sized up moves too. The volume's not very high for them. But once you accept these prices, or if you were able to move out of here without much of a volume increase, that's a good entry. It's pushing through the automatic rally. Now, if you look at the next pattern that happens, you guys know this, you tend to sit around and do the low volume test of the automatic rally, right? There it is. So that's another confirmation in the pattern, moving up off of that as an entry. Break, low volume test, continuation. Again, that's wyckoff, right? Once you break out of a cumulative, if this is a 1 hour chart, it's the same thing. Automatic rally, break, test, continuation, low volume. Because the buyers push it up, and sellers may or may not show up to some extent, but they want to know that it's dried up in this area. Otherwise, what? You get a sign of weakness and a fake breakout, right? And we come down, and that says, okay, the selling is still too active, like we see on the 1 hour chart. Same pattern. So there's an example. Like here's a really early one. So it's a matter of, not all the time you'll get an automatic rally, like 9 out of 10 times you do. But if you just start trending upward, there's no supply. There's test of areas where they're testing for sellers, and if they don't show up, it's likely to continue. So there's a lot to get into, but that sort of gives you an idea. Sort of aggressive entry here, and then a good break, low volume test here. And I just grabbed anything. This is the 5 minute. I used the 5 minute to get in. So this was just... So you see the principles of that being the same. That's for entry. But if you look at the 1 hour chart, right? It's the same sort of thing. And in this case, again, the volume was high at trying to get above it. And in this case, actually came back below here instead of doing the low volume test, right? And which is a bearish pattern, fake breakout weakness. So hopefully that kind of brings it together. So it's really all the same, this fake breakout patterns, the signs of strength and weakness. This tests of important areas to give you answers, whatever. The 1 hour gives you the overview, tells you what's going on, where you want to get in. 5 minute actually gives you the entry, but it's based on the same stuff. But again, you can watch my videos. There's a million of them. And I'm sure you'll come across some entry explanations. So again, at the moment, seeing if we can finally get out of here. I'm patient. I don't say it like I'm frustrated or anything, you know. It is what it is. If it doesn't make it out and drops lower, I have a plan for everything. That's fine. Honestly, it would be nice to see it move up. But emotions aside, we'll see if it does or if it doesn't. Now, again, just to kind of help you when you're trading by at least telling you what I'm doing and my thinking, and it's all logical. It's not based on some formula, secret, silly business. Now, if it starts to break here, let's say it starts to break here, and we see some very high volume. This sort of rejection thing, but higher volume, right? Just giving you some scenarios so you, again, deepen your understanding, and the charts just tell you what to do once you understand it, right? Charts tell you what to do. Just listen to them. So if it's moving up here, and let's say we get some very high volume, you know, something like this, maybe higher, rejecting that attempt to move up, right? Failed markup again, and comes back into the range, right? Below here on a failed high volume try. And it's very high, I'm closing my position, or at least most of it, right? I would be a fool just to hang on when that's going on, right? It's all about listening to the chart. Now you're just hoping, right? The chart just gave you a big middle finger to your trade, and you're just hoping instead of, you know, holding your position because the chart said so, right? So that's something to think about going forward. You know, if this happens, if that happens, what am I going to do? And it's all the chart tells you. When you get to the point like, you know, you can read the charts well, where to get in and get out is kind of logical. You pretty much have street signs turn here. More like 75. What's that? 75 is here. Yeah, 75 is like slightly, or if you're talking about 11,750, it's slightly above, or basically the top is at 75. Well, I don't know if this lights up. But anyway, yeah. I like to see it test the high and slightly above is ideal. So if you notice on the other ones, it's above the previous. This slightly above, and then you have this one slightly above. It's truly testing the area to really see what's going to happen. It's got to find out what's up here. And if there's too much supply, there's no reason to force the markup. Maybe somebody will drop some fake good news. It'll fly up, and then these buyers will get out on some huge weakness, and everybody will be sucked into long positions. I mean, this is the kind of shit that goes on. But you follow the chart. Sell rallies, buy dips. Not a million videos, but like, oh, I don't know, 50, something like that. Yeah, that's true. They're not all still available, but I've been doing it since 2012. I think I started YouTube, but there's a lot of explanations for things. All right, and anything else people want to look at? Of course, we can look at the Forex charts. But the positions that I got in are, I'm in profit as I scaled into lower moves and some of this stuff I showed you, but not by very much, and definitely not near any real targets I don't want to get to. But again, if it fails on some very high volume, that'll be a big warning. If it makes it on low volume, that'll be a great sign. And if we're sitting around doing nothing, we're doing nothing. MAs, okay. So, are these right? Yeah. Let me get a drink. Okay. A lot of people know this, so I don't want to spend too long on it, but I'm happy to answer. I use them as support resistance, not as a crossover or telling me what direction to trade in, or sort of the usual things that people use moving averages for, or oscillators, or any of that kind of business. The 50 EMA and the 14 EMA act as support resistance basically on every time frame. Just the same way I show you the stuff that's fractal, the 1 hour analysis, the 5-minute analysis. We have the same patterns, the same rules, same principles. These moving averages from what I've seen, and maybe other ones do it too, and I'm used to these, but I love the 50 EMA and the 14. In strong trends, you bounce off the 14. On retracements, you hit the 50. Now, I don't trade off that alone, but it's a piece of information. So when volume and a moving average give me a level, I got a good start. Maybe there's a fib there. Maybe there's a previous support resistance. Maybe there's a pattern or something, you know. So it's one of the tools. I don't trade off of them alone. But the 14 EMA, I mean, let me go to the 5-minute chart during a trending period, and you absolutely see 14 EMA rejections. Now, we've been ranging lately, but... Oh, can I? Yeah, I can drag this. This is the range after the drop. I know it looks big, but that's the 5-minute. We have not been trending. So there's a 14 EMA test. This is rangy kind of stuff. Talking about trending moves. Trendy. And the 50 acts as support resistance. When you're in a range, they're useless. When you're going sideways like this, barely making it out of the range, the moving averages are useless. As soon as it starts to trend, 14, and bigger pullbacks tend to go to the 50. 14, bigger pullback to the 50. 50. So you get the point. Ranging, right? And now we're trending again. 14. And it's not every single time, so you see, I'm not trading off it alone, but you see it's consistent enough to count it as a piece of information to help make the decision. So again, the 14 kind of marks that it's a strong trend. Here it kind of, messed around with both, but we do see on the 5-minute, for example, now, just to look at it, a trending structure, higher highs, higher lows. We know this is automatic rally and all that, but trending structure, and if it bounces off the 14 here and it continues up, that's a very good signal that it's very bullish. So strong trends will bounce off the 14, not kind of medium weak trends. It's there, and they typically will hit the 14 at some point. If you have a good trending day, you'll get 1, 2, 3 ounces off the 14. So that's how I use it. Support and the 50. So support resistance is a good way to put it. Also, the 14 EMA is where I like to see a no supply, no demand after strength and weakness, if you know those type of setups, which is a lot to get into. But yeah, a lot of action in Forex. All right, let's get to that. I was tired. I just wanted to lay down, do nothing. But I told you guys I'd be doing this at 10, and I'm glad I did it. It keeps me disciplined. I could just look at my phone, whatever. But here I am getting a little more focused, check news, update my plan on everything. I just want to look at the news stuff. So yesterday... Today's Thursday, yeah. This is for London Open coming up. Okay, so to the charts. Right off the bat, this is, to me, a wait-and-see situation. But there are some things we could certainly talk about and plan for. So, okay. We'll do our 1 hour, let's just see if there's anything to the left. I don't think so. Well, there is a fib area, actually. All right. So following the storyline, we're trending upward. There's really no issue with it. It's a nice, healthy trend. A bit of buying on this move. And that. A lot of supply, a lot of getting out of those positions right there. Now we got to go to the 5 minute and make sure it is what it appears to be, but this is all kind of high price area stuff here. There's the high volume. So we see the high volume at high price confirms its proper weakness. We'll go to the small time frame and see. But there, of course, from a 1 hour point of view is weakness. Ultra high volume, high price, rejection, widespread, rejection here, classic stuff, right? So now, like that says, do not buy anymore in this trend. Now, this is not usually what you get next, right? But everything's just facts. Let's put it together. Even higher volume on the down move, showing a sign of strength off the 50 EMA. So in this case, this volume is higher. It's more recent. It doesn't give you a good imbalance, which is what you need for a good trade. Like, if you notice the higher prices here don't bring high volume. And that's what makes you say, we're in a good trend. Big difference there, right? So let's look at the 5 minute. Is my mic breaking up? Hold on a second. Is it? Okay, sounds good. All right, so let's look at it close up. Let's see what it really tells us. So here we have some very aggressive buying, but certainly selling and profit taking here to a large extent. Also, this is a mix of buying and selling. If you look at the candles, they are not big, but the volume's very high, right? So you have, what's crackling? I hear a crackling sound. Okay. So you have some very aggressive buying, but at the same time, supply selling coming into it. This is typical of a positive news situation late in a trend. This is late buyers chasing breakouts and really going the wrong way. Because again, if you're going into high prices and the volume is high, sellers are active. If it stops the progress, you're really turning bearish, and that's what happened here. Again, still high volume. Here's a 14 EMA test for buyers. There's a little bit. Okay, then we get into a slower time. So certainly weakness and enough volume and selling into these up moves, right? That's why the volume's so high on little candles. If the selling didn't come in large amounts, this would have been a big green candle right here, right? These. But all that activity with very little movement means it's a lot of buying and selling. And of course, there's our regular sign of weakness. Classic stuff there. Okay. So do we want to keep buying this trend? Of course not. Now, something developed here that's not typical, which is on the move down off of such weakness, there's high volume here, which is showing some buying into the down move. Anything can happen. It's just facts. This is typically, and the volume's not too high for the size of that candle. It didn't bring very much demand, but then this one did. And we get into lower prices, and we can see a little buying into that. So it's a bit of a mismatch. I'd wait for that to work out or get a little away from each other. It's no longer this healthy trend stuff, because even here, if you're buying here off strength, you're buying into an area that recently had very large selling, which gives a probability that it has very large selling again. And the sellers could come in even sooner, right? And maybe a little 618 here or something. So there's a bit of a mismatch. The only thing I would do here is allow for a good price and a confirmation of something, and at a good price. So for example, double bottom fake break. They happen every day, right? Those fake breaks. Now, if we got to this point, then we'd have strength and a fake break bullish pattern. And volume would have to be on the higher side. The 5 minute would have to confirm it's buying in this area. And it's likely moving up from there. Is it ideal? Definitely not because of this. But every day is different, and this trend just turned into this sort of risky situation. But logically, if I was looking for something, I want to get away, or even lower, right? The point is, buying into high volume selling, right? Not a good idea. 618 overshoot, whatever it may be. So if that doesn't successfully make it through and continue the trend, it's perfectly fine, right? Let me just check the chat. Okay, good. Another option, selling off that. So again, there was a lot of selling here. If you get confirmation of overwhelming selling here, you're likely coming down. Now, how far down? Who knows? Because you still have to deal with some demand in here. So not a good sort of trending, simple situation that it was before. It's just facts. A lot of profit-taking selling, but then some buying came into this move. So this kind of stuff also tends to create a range. You know, it moves down, hits buyers, moves up, hits sellers, and you can get into a range until one of them sort of dries up. So it's a bit of a mismatch, and when that happens, I just need to get away. Buy low, sell high is the same story, right? But we have an understanding that it's not a great trend anymore, and let another piece of information come in. While it's in this area, I would never touch it while it's in between high volume buying and selling, and it's in the middle. It's not a good area to predict something high probability. So I know that this stuff happened all over the place. If you look at the pound, again, high price, fake breakout. It ain't me, that's the market. Fake breakout. Weakness, 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 right? It was trending up, and the pound was particularly strong lately. And look at the volume. So that's how strong trends finish, right? What do I say? Strong trends go out with a bang. This is a good trending move. And there's the bang. Again, look at the volume on that compared to the previous. It's higher than everything throughout the trend, right? Okay. That's how strong trends end. With a bang. Why not? Fake breakout. Sign of weakness. So, again, that's there, but then that's there. And let's look at the 5 minute. So it's not your typical situation that you get after climactic weakness on a trend, that you would end up with so much activity on lower prices that are not really far away. It didn't do a few waves down that took a few days or anything like that. It's the same day. And again, it's not like all focused here. There was certainly some selling going on, but again, you go into new low ground, you get low prices, and the volume's excessive. There better be some damn big candles like this. Otherwise, what is all that activity? It's buying, right? There's buying there. There's the biggest mismatch of high volume, small candle. This guy is not high volume. This is the biggest mismatch, meaning, right, it's a regular sized candle and high volume compared to that. That's a big candle. That's a big candle. Oh, that's actually small there too. This was a mix. But so to see all that buying in here, normally if I saw that weakness, I'd simply be looking to short. Real easy, but I can't do it because it's very unconventional here. But just to tell you, normally I'd be looking to short here if the strength didn't show up, right? Then the trend ended on a nice, perfect fake breakout, climactic volume. And just so you guys know, I would be looking to short here on a sign of weakness, and likely it does another leg down off of that, or I'd be looking to short on another test of this area, and sometimes you get another fake breakout, or in this area, the setup can form. But with this much strength, and that's the highest volume, I can't sell, right? So we need to work these things out. Again, it's similar in the end to the euro dollar. If we test here, and again, we see large buying, I would buy, but knowing it could be very limited. It could sell off weakness here, but it's not the greatest situation having a bit of a mismatch and buyers and sellers in such large amounts close together. So every day is different. That's what it is today. That's not a usual pattern to see, but you see how we can just get facts and probability off of that. Check the chat. Yeah, I could definitely see how it's confusing because you learn, the basic patterns. You learn the market phases and this and that, and in this case, you go, oh great, double top, fake break, high volume weakness, and then that next high volume that came, hours later, could have you go, what the heck is that? And it's really rare. But again, if you know how to read it, then apply the same things that then you'll get an answer, which is lower prices attracted a lot of activity and stopped the progress, so buyers are still active. There's a bit of a mismatch. It happens. There's a bit of the market's in balance, and it's not because it's inactive. It's very active. The higher prices brought a lot of selling, lower prices brought a lot of buying, and let's have the charts work that out before we pick a direction. Yeah. Could you find an entry after initial large selling before buyers came in? Sure, let's see if it's there. Well, with all this analysis, we don't always end up talking about the actual entry because you got to know why, where, when, who, what in the first place before you enter. But let's see exactly how I would, any opportunities that I would consider valid. Get rid of that. Okay, and again, it's just applying the basic stuff, and it's going to lead me to something, right? Either a trade or no trade. So, weakness, fake breakout, right? That's the previous high. Weakness, fake breakout, selling into the up move, 1 hour's climactic. Now, the thing is, I have to say, you're going counter trend, and I wait for the 1 hour to close, because if this closed up into new ground on this volume, then I would not call it a proper weakness. This fake breakout, right, coming back into range. I mean, if you're looking to sell and price is in new high ground, you're better off waiting, right? Once it creates the fake break pattern and this candle closes down, and even to confirm even more, the reaction to that high volume, not bringing it out, not being, buyers coming in and pushing it up. 5 minute kind of told you it was selling. So once that happens, so we have to think in real time. The early stuff is too early because it's counter trend. So you need the an hour to pass here, right? Just to make that point. Okay. And this candle opened at 17, so that starts to be where I would look for it. I knew I would need at least this, right? And that's a clear signal to most people who use volume. Waiting for that to close says, okay, we're good. Fake break pattern. So at this point, which is 17, so let's get in there. Okay. So again, in real time, this is the 1 hour, and not even high volume yet. You don't know what. You see weakness on the 5 minute, but you need a higher time frame. For me, the 1 hour is fine to confirm a reversal situation. Okay, I just want to be clear about that. Now, real-time analysis. Okay, you get your weakness confirmed at this point. You get your fake breakout confirmed at this point. 1 hour you'd still be waiting for. Now, no demand or breaking through an automatic support or both, a combination of both, is the entries. So if we're looking at the first level, if we're looking for a no demand, that didn't happen here. But the first level of support after weakness is the automatic support. That's now has set the range, which we could update that. Well, that's the old level, so we'll leave it. So between this high and low here, this is our, you could call it distribution range, right? This is a failed attempt in a way, right? Not a lot of volume on it, but we were talking about stuff before, the attempts to get out of these ranges. So breaking through properly is one way to get in, right? We talked about this kind of stuff before, and it lines up exactly with my 1 hour analysis on Bitcoin, because everything's the same in the end. It's not that many different variations of things, and they're fractal. And that's my overview, and this is my entry sort of stuff. Same thing. So if we can get through this, then we are marking down, right? If we're in a markdown type of activity. If we see high volume here rejecting, it says what? Buyers are still too active. Think about what the 1 hour chart said right now, right? It's like this same pattern, but large buying here, right? Think about the 1 hour chart here. I got to show you. So, right, there's the weakness, and as it came and created the support, large buying demand. And then again, the 5 minute. Where am I? Oh, wrong day. Okay. 5 minute, good, right? Not showing large buying. So this gives you a read on it. So selling's there, buying is at least decreased compared to that, and not higher. So going forward, I'm looking for most often a push through the automatic rally in a proper way, not bringing buyers, right? Think about the 1 hour analysis on Bitcoin. It's starting to move up and it can't break out because the volume keeps increasing every time it tries to get out of the accumulation range. In this case, it's trying to get out of the distribution range, and we don't want to see high. What do we see? Yes. Right? It's there. There's the way you get out. And at this point, just to update exactly, right, because this would be the bottom, then you update it to this one, right? I'm sticking to some specific points today, which is good. It's repetition and different time frames, but it's the same thing. So I'm updating my automatic support here, right? Because it's a new low, as I've been explaining today. So at what point do we say we've made it out and it's proper and we don't have a sign of strength? We're not having a fake break, right? It's there. So that's a very common pattern to get into the trade, and it makes perfect sense. Now, just talk about some variations that could have happened. We could have come up here, double top fake break, come off of that and get a no supply at an area, a no demand at an area at which we are testing for demand, not a random no demand that happens to show up. It's a little more to get into, but typically the 14 EMA, right? If this double topped, you would bring the 14 EMA up, and that's a first place test for buyers. 50 EMA, you can draw fibs, and etc. So it's a lot to get into. There's 12 minutes left. But to kind of bring home the point today about what we've been talking about there. Notice the no demand right there. This is what? That crucial level where high volume, you're likely to not get out. Low volume, why? Why is it low? Why is it not kind of medium or kind of high so that selling picks up, right? Very important. Sellers are looking for these prices. Sellers are looking for high prices. When the buyers disappear at this level, they're not going to get those prices anymore, right? But in the meantime, the selling dries up. The selling pauses is the word I use. You pause your sell activity. Now, of course, you have some pretty good aggressive selling through here as well. But this is the big stuff. Smart traders, big money, are not selling at this point. They completely stop and let the buyers do what they're going to do, right? And the buyers didn't show up. So you have the lowest volume in this whole deal right there, giving you the no demand. And then we made it out. Again, no issue with buyers coming in. It closed on the low volume, low. Look, it's kind of falling off. And you look at the progress that it made right here on some very low volume. It kind of got to the point. Why? Lack of buyers, not high volume selling, right? Now, if you look at what happens next. Hello, Wyckoff. Break, test, continuation of automatic support. No demand. 14 EMA. You guys know this. It's in my scalp course. Talk about it all the time. It's a combination. In my recent stream, I talked about this combination too, hypothetically, so you get to see it here. Break, test, continuation of automatic support, which happens to also be, or a support if you're sort of scalping or looking, doing your general 1 hour analysis. These line up. So 14 EMA, we're talking about that. Break, test, continuation, support acting as resistance, the wyckoff pattern of the coming back to test and going after this, right? And off it goes. Now, at this point, the chart says, wow, ooh, there's a lot of buying coming in. Maybe I shouldn't be so big on targets. You work off information, right? But it's still a good trade. Yeah, break of ice, right. Again, like I say, with this stuff, I always have to do this disclaimer. The Wyckoff stuff, the VSA stuff, I learned it years ago. I got into it in 2007, and I made my own thing out of it, and I haven't looked at it in years, and I don't use all the terms, and I found my own way to do it instead of just being a copier. Obviously, there's a lot of stuff that I did keep. But break of ice, you could call it... push through, I call it the push through, or the switch over into markdown or markup out of the accumulation or distribution range, break of ice, back up to edge of ice and markdown. Yeah, exactly. That was how Wyckoff did it. Yeah. So you notice Wyckoff is on the 5-minute, the 1 hour, VSA. It's simple. There's nothing contradictory. It's logical. And in the end, it kind of tells you where to get in and how to manage your trade, right? I like supply demand trading also. Also very good analysis. There's no other way to trade right. It's great. Supply and demand is why the price moves in the first place. So let's just get down to it. We don't have to put on the financial news channel. Wasn't something supposed to happen with the expiry, futures expiring? Some big hype. Is that today? Is that tomorrow? I don't pay attention to that stuff. I drown it all out and just do what the chart says. What else? All right, we got 8 minutes left. I was hoping today that we'd get some action on this guy moving up. Either moving up or I have no emotional attachment. Of course, I wanted to move up. But either doing it or failing so we could sort of see it in real time. But I got to show you some other examples to just, there they are. So the equivalent of what I was just talking about, right, in reverse. Can we get through the trading range without this showing up? We want no supply. We're talking about no demand on the way out, right, on the pound. No supply. Can we get lack of volume here? And if it wants to be textbook, what's going to happen? Let's say it's going to mark up now and it's going to be textbook. Any variation off of that is information. But there is a default textbook thing. What do I call it? Anyway, it's like a default pattern. It's a default thing. The wyckoff, the phases, and any variation of that is information. But it's working off of that. So again here, what would be textbook? We move up through here, and instead of finally seeing high volume in these attempts, right, it's lower. The lower, the better. And likely at this point and slightly above, it kind of pauses the activity. Sellers don't show up, and off you go. You may do, a break, test, continuation of this level. So we can draw in. That's our automatic rally right now. So that would be textbook here. Move up. The volume finally doesn't increase. The lower, the better. No supply situation. Break, test, continuation may or may not happen, but that's the textbook. We see it a million times, and off you go. And until you hit large supply, you're safely in markup, and the entries could be off favor tradesmen and volume signals, no supply at a small resistance point, a little pullback and double bottom fake breakout with strength, right, etc. So variations on that tell you a lot. Because that's the template. Sorry, that was the word I was looking for before. This wyckoff stuff is the template of every single market. This is how it works. So anything that's not that is information. And you consider that. So for example, I have to sneeze. Hold on. I think I have to sneeze. I got that tickle. Just one? Okay. Usually it's a twofer. So variations on that pattern tell you something. For example, let's say we move up. Volume's not high, it's low, all good. Move up. And there is no break, test, continuation. Very aggressive buying, very confident buying. No time for that. We're off. Right? It requires some bit of selling to have it move up, come back, right? And then continue. So sometimes you'll see it move up. You'll hit a point, whether it's a whole number, a previous level, something, right? Not a random spot that they test at. It could even be a symmetrical move up. Things sort of snap together, obvious levels. So they test for sellers there, the buyers, right? The volume drops off because the buying stopped, and the sellers don't show up. So the volume is very low. And you kind of hang around, and you continue, right? Logically, it did that instead of a break, test, continuation, because there wasn't enough selling to bring it back down. So what does that tell you? Extreme imbalance. Very good. Extreme imbalance. Demand high, supply low. So if you're working off of the template, any variation, right, tells you something. And now you can read anything that happens on the chart. I just know futures contracts expire, right? And then they simply roll over to the next day. And I don't know. You know, it's like, it's funny. It's a new time. It's a new age with people trading this and YouTube. YouTube hypes up everything from the end of the world is going to happen on this date. You know, it's YouTube clickbait culture, you know? So dramatic. So there's a thing going around now that today, tomorrow, when the contracts expire, is going to be all hell to pay. It's going to drop to 8 or it's going to shoot up to 15. It's like, whatever. Whatever the chart says. Don't start acting on any of that stuff ever. Don't bet on the crash. You'll be wrong 9 out of 10 years of your life if you're betting on the crash. People like to hype up the crash on YouTube. It's coming. 2018, the crash of the dollar. Well, I'm sure it's there. I could find a million videos saying 2017, 16, 15, 14 are all going to be the year of the crash of the dollar, right? Gerald Celente is out there telling everybody, it's over. Okay, it wasn't over before, but now it's over. Okay, no, now it's don't get caught up in that business. Any reads you recommend? As I always say, whatever you can get your hands on is good. Wyckoff, VSA, Tom Williams, Gavin Holmes stuff, but it's not going to be the same thing that I teach and the same way that I trade. It's just where I got my information from to start to build up my own understanding and strategy, which kind of came out of the understanding. So you're gonna what's her name, Anna Cooling or something? Anna Cooling. Like, I read something from her. I got a paragraph or two in. I'm like, no, I don't like this. Hey, that's me. I don't know. Maybe it works for somebody. Anybody here, Anna Cooling, help their trading? Let me know. And it was just awful material. So for people that are learning, I would recommend watch my videos and say to yourself, okay, that's the way he trades. Take it for what it is. And, you know, make your own decision. Looking at that and read Master the Markets and Wyckoff stuff and whatever you get your hands on. But in the end, make your own decision, kind of the way I did, I guess. And, you know, there's crap out there. There's good stuff out there. There's stuff out there that's a mix of good and crap. So you just got to be careful. All I can tell you is, obviously, I think what I'm doing is the best, or else I wouldn't be doing it. But you make up your own mind. Is there a reputable broker for Forex if only depositing $500 or so in the U.S.? I don't know. I used to always say FXCM, but they're gone, right? Maybe Forex.com. I'm not sure what their minimum is. Not sure. You got mine from Pete. Oh, as far as your education, petefader, Gary Follett, Dr. Gary Dayton. I know those names. David Weiss, Weisswave. Yeah, that's funny. I think David Weiss is also a mix engineer. It's a different David Weiss. But again, like Weisswave, I've tried. It's not personal. Whatever works for people. Weisswave makes no sense to me because the higher volume in a wave tells you that there could be trading coming in against it. We already know this. So a high volume up move on Weisswave doesn't tell you this, oh, that's a lot of buying. It actually tells you there's a lot of buying, but there's also a lot of selling. That's why the volume's so high. We know this. So you come across things like that. This is all just my opinion. You come across something like that, it doesn't line up with what I'm talking about. And it makes you go, Pete says if there's an up move and the volume's excessive, that there's selling into it. Right? David Weiss says if your cumulative volume or whatever is a slightly different thing, it's the same thing, volume is high on the up move, then it's strong buying and it's a strong wave, right? I don't know. That's kind of stuff I saw and I just moved on with my life. It doesn't make any sense. For supply and demand, I like Mark Lovejoy. That's his real name? Sorry. Sorry if I shouldn't mention others just trying to help. No, it's all good. It's all good. Really. Because I can tell you my opinion and you guys can have your opinion and that's all good. Maybe Oanda, yeah. Because they've been around forever. Are they still around? Oh, shit. They survived. They survived 2008 crash. They survived Dodd-Frank. They survived. So, yeah, check out Oanda, as Chris said, for, I guess they survived everything, regulation. A lot of brokers left. You go back to their website and they tell you, not available in the U.S. Like everybody else I'm talking to is using them. So, I don't know. If Oanda's still around, cool. Because they've been around forever. You don't have to worry about managed risk appropriate small account. Yeah. Oh, that's right. They have what is it called? Nano lots or something? Quantum lots. 0.000001 penny risk per pip. Quantum lot. I use Sierra charts, and they have accumulated volume on waves, Weiss wave, and I do have a look at a regular old-fashioned chart to help. Okay, if that's working for you. You know, there's a difference between accumulated volume on an up move being of a healthy level, saying, okay, the market's active and it's moving up, and maybe a difference between that and it's a little excessive, and the volume is actually focused in the higher prices of that up move. Okay, that's weakness. Yeah, but still, my favorite time to be in an uptrend is when volume's not high. That means no one's selling against it. It's just easily moving up. Buying comes in and it moves. There's no selling coming in against it, making it tick up and down, tick up and down. It's pretty straightforward, mostly upticks, and that's not going to give you a lot of activity, a lot of volume. All right, cool. And that's an hour. Felt like 15 minutes. Okay, so just before I go, I'll remind if anybody's new here today or hasn't done it yet, if you want to be, I sent out the email today, so you should have gotten it. Hopefully it didn't go to your spam folder or anything, because I'm sending these out before I start with my mass email thing. So if you didn't see, first of all, if you didn't see the email, it might be in your spam folder. Mark it as not spam, but it's very rare that people say that happens. Mostly it's fine. So enter your email here if you want to know about live streams right before I start, 20 minutes, 30 minutes, 10 minutes. I'll send out an email. Also, the live sessions that are going to be on a regular basis, I think I'm starting it next week. But again, I'll put your email and you'll know. And I'm likely doing 4 days a week, 10 p.m. Eastern, and then London Open 3 a.m. Eastern, an hour each, to keep you guys up to date day in, day out on what I'm doing, what I'm seeing, answer your questions on all that, because things are always popping up and developing, and we can stay caught up with everything. Do it on a daily basis. If you end up wanting to subscribe, it won't be very expensive or anything. Where am I here? There is a free video on Big Mike's forum by Trevor Knight. He uses Wyckoff and Weiss wave. Okay, that's cool. Yeah, I really don't mind people sharing other sources. It's really fine, because you were maybe concerned about that. It's really fine. I just give my opinion, and you guys make your own conclusions. It's all good. I trade the way I trade because that's what I obviously think is the best. That's me. I've also called live trades for years, so there's that. Thanks, Pete. You're very welcome. Appreciate the live streams. I can catch them at this time, but not middle of the night. I live in Dallas, Texas, so Central Time Zone. Okay, and if you end up, no pressure, whatever, you can just stick to the live ones, which I'll be doing here and there once I start the subscription-based. But just so people know, I'm probably going to do Monday, how I was thinking of Sunday night or Monday, because Sunday night is pre-Forex open. Sunday night for me is like Asia is actually opening. So there could be okay, what's going on with the charts as we get into the week, and also there's movement on the weekends with Bitcoins. It could do Sunday night to Thursday night. I'm not exactly sure. As soon as I decide, I'll stick to it, of course. That'll be the schedule, and I'll email to you guys information. But for people who, of course, these streams now are recorded for you to watch. If you end up signing up next week for the subscription-based, you will get a recording of everything. So I'm going to be uploading these videos, and we won't be using YouTube stream. It'll be a GoToWebinar, you know. So you'll be able to watch them. Even if you miss both sessions and you want to get caught up, you know, an hour after the second one. Whereas, Pete, what's going on? Let's get some information on the market. You got it in your email. So it'll be on YouTube as unlisted. So only, you know, I'll email out the link, and there you go. Nice and simple. So you don't have to worry about, I'm not going to be there and miss it. And, you know, you always have it to watch. And also, you know, the little lessons that end up going on in there, you start to get all that stuff. After climactic volume at the top and also climactic buying coming in after there, would you look to buy? So if there's climactic bottom, what's up, Flirt 2? I recognize your name. After climactic volume at the top and also climactic buying coming in at, right, you're talking about, yeah, you must have missed it. I explained that stuff. You're talking about the current situation on the dollar pairs, $0, pound, dollar. We looked at those. So if you missed it, I will. You'll be able to watch it again on the recording. That's going to be up a few minutes after I finish. Okay. Chris, looking forward to getting the live streams going. Cool. Good. All right. Maybe I'll take a nap now. Wake up for London. Set an alert if this thing friggin' breaks out. Can we do it? I think it's alert time. 1789, 1790. Or, what am I saying? 11, 8, 11, 7. All right, guys. Flirt 2? Okay, good. Yep. So a few minutes after I end, you guys will be able to watch this in its entirety. All right, cool. I'll most likely be on tomorrow again. This is my schedule, the 10 p.m. thing. And then again next week, I'm going to be starting the subscription-based. And you'll be able to sign up here, and it'll be cheap, and it'll be fun. I'd rather trade this way. So put your email, you'll know about anything going on with me, including when the live streams are. All right, guys. Thanks for attending. Let's keep an eye on this. Remember, we want to get out without the sellers, and the party's on. All right, guys. See ya.